Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the market went down into the 1675 support and attempted to break down below that area multiple times, but responsive buyers stepped in. At this point, heading into the open, our short-term bias is going to continue to be neutral, and how the market responds to this 22 to 24 pre-market support and the 26 quarter to 27 half pre-market resistance is going to help us establish the intraday bias. If ES can hold above 22 to 24, then that means that the breakout attempt from the overnight balance has been successful, and in that case we can head higher and tag the 2130 high volume node, the 30 half VPOC, the 32 half to 34 half resistance, and perhaps even higher, because right now the larger time frame resistance is at 39 half to 42 half, which marks the current developing balance area high, and the larger time frame support continues to be down at 0775 to 1075. So heading into the open, our bias is going to be fairly neutral. We are open to a short-term move in either direction, and how ES responds to 22 to 24 is going to help us figure that out. So in the event that the market holds the pre-market support zone, then we could be heading higher, at least up towards the 30 high volume node and the 32 half, 34 half initial resistance. Perhaps the sell side steps in there, but keep in mind that that is essentially kind of the middle of the current developing balance. So we do have to exercise some caution there. If we're heading up on broad market strength and sustained upside momentum, then perhaps be careful at 32 half to 34 half, and then there is better resistance at 37 and 39 half to 42 half. In the event of a failure at 22 to 24, technically buyers can defend 1675 to 1875, but even that zone would then call for caution, because it would mean that the overnight breakout attempt has completely failed. So if we're heading down below 22 to 24 on broad market weakness and sustained downside momentum, then we need to be careful at the 1675 to 1875, because ES could then be gearing up for a test of 0775 to 1075, and then that is still a zone where the buy side could defend on first test, but we've already seen a pretty decent response at that zone. So again, it does call for caution, but we'll have to assess the situation in real time. If things are not looking extremely bearish, or if the market is short-term exhausted into that zone, then we can still anticipate buyers being active there, at least on first test. And then beyond that, we have support at 2100 quarter to 02 quarter. But if the market breaks 0775 to 1075, then we know that the sellers are in firm control. So at that point, even though again buyers can be active at 2100 quarter to 02 quarter, especially on first test, overall we would be trading in quite a more bearish environment at that point. So we'll have to assess the situation again in real time, and still be a bit more careful on the long side. So again, going into the open, our short-term bias is quite neutral. We're open to a move in either direction. We're going to have to see how ES responds to 22 to 24. If it's holding it, then it's a sign that the overnight breakout attempt is still holding up, and we could be gearing up for a move higher. If we fail at pre-market support, in that case you may want to skip even the initial support zone. So then we'll have to assess the situation in real time. But since the market is currently in a balancing phase, if you look at the last 3 sessions, you can see that we're basically just developing this big balance, this range. And because we're balancing in a range, we have to be fairly flexible and nimble with our intraday bias. And then on the larger time frames, as long as ES is holding below 39 half to 42 half, the market is still stuck in a trading range, and the bigger structure can continue to be somewhat bearish. So right now the market's just developing this balance area. It's still trading within the range, and it's important to be nimble and flexible with our short-term bias, simply because the market can continue to be fairly range bound. So Heading into the open, let's keep an eye on this 22 to 24 pre-market support. It's really going to help set the tone, and we'll take it from there.